Welcome, guys. Good morning. Happy Monday. Hope you had a good weekend. Hope you're ready for another trading week ahead. Today is August 10th. So welcome to the pre-market overview. My name is Becky. My email address is here, becky@tradewithufos.com. So you can always email me if you have any questions about what I covered today. Also, the support team, support@tradewithufos.com. We're all traders here within the team, so whatever questions you have, anybody can answer. So just email support@tradewithufos.com. Them being a team normally means they're quicker at responding anyway. Okay, so just to explain briefly what the newsletter is, what the pre-market overview is, we go through the newsletter, which is, I'll explain what that is. So the newsletter is a document that we send out every day, Monday to Friday. And in that newsletter, we go through 4 of the major markets in the world. So we look at the S&P, oil, gold, and the euro dollar. We look at where we think they're going, where they're likely to turn, and volatility as well as letting you guys know high impact news that could impact those markets. So we go through the pre-market overview for 15-20 minutes to just expand on those concepts that we go through in the newsletter and explain it in a little bit more depth for those that need to understand it at a maybe deeper level. So if you're not already subscribed to get the newsletter every day, you can email us newsletter@tradewithufos.com and we will send that to you on a daily basis, obviously with an updated document every day. So a couple of reminders, today being a Monday, we have futures at 9 a.m. Eastern and we have options at 1 p.m. Eastern. You'll see there that we run futures and options Monday, Wednesday and Friday. We do stocks and investing sessions on Tuesdays and Thursdays. So that's going to be your sort of longer term stuff that we do on those days. Again, 9 a.m. and 1 p.m. Eastern, respectively. Then we have our sharpening sessions over the weekend. So during the sessions, whether we're doing futures, options, stocks, investing, sometimes we're putting trades on, we're trying to put live trades on in the markets, which means we can't expand on theory quite as much because we're more in a rush to get those trades on. When it comes to the weekends, when the markets are closed, we can expand on things much, much more. So we can go more into methodology, the concepts, the theory. You guys can bring your questions to those sessions. So I'd really highly recommend them for that reason, as well as the psychology sharpening sessions as well. Psychology is so often overlooked as to its impact on our trading. So if we can attend those sessions on a weekly basis and just keep what's going on between our ears as stable as possible, then that's obviously good for our trading. In terms of upcoming live courses, so we are currently on the stocks class. I'm taking that class. So we're a few days into that. We're about to start our day 3 on that one. Now, all of the classes are unrestricted future retakes. So whatever class you enroll for, you can take the classes as many times as you need into the future. Obviously, depending on availability, it depends on if Zoom rooms have a cutoff the amount of people that can be there. But you do have unrestricted access to it. We then have psychology, futures, trading plans, and back testing. Those are the other upcoming classes that we have. So you can check those dates out there. Okay, so I need to do the disclaimer. So the disclaimer is there. It's a long disclaimer, so I'm not going to read it out. It would take me forever. But hopefully your eyes can read as it's moving across like that. Of course, you are welcome to pause the video if you need to, if you want to read that, or obviously come back to this part if you want to read it. Or you can go to www.youcantrade.com and get additional disclosure information on there. In a nutshell, effectively what we're saying in the disclaimer is that this is not trading advice or ideas, it is demonstrations. So you guys get an understanding of how we use the product, and that the risk in trading is entirely yours to take. If you choose to place trades, that's up to you. Okay, so now that we've done that, let's go and have a look at our newsletter. So this is what it looks like. I'll just scroll to the top there. So like I said, every day we are going through 4 of the major markets in the world. So we have the S&P, one of the major equity indices in the world, oil and gold, both commodities, and the euro. Now the euro, when looked at versus the US dollar, is the highest traded currency pair in the world, and Forex is the highest traded market in the world. So that kind of gives you an idea of the amount of orders, the volume that's going through that market. The US dollar by itself is responsible for 80% of transactions worldwide every day. So we've covered a lot of what goes on out there in the markets. Even if it's not directly those markets that you trade, there will be correlations, I'm sure, with what you do trade. Now you'll see as well, we're going to go through a daily chart for each of these markets. Of course, different things happen on different time frames. If you trade very, very small time frames like minute charts, or you trade monthly charts, obviously things are going to be different. However, the daily does seem to fall amongst what most people do. Whether you're short-term trading or long-term trading, the daily does seem to fall somewhere in that. Now, for each of these markets, we are going through climate, which basically means trend, what direction are we in, and what are the probabilities associated with that. Propagating, which is how long can we expect that trend or that movement to continue in that same direction, based on what's normal, based on what's average, based on what is statistically likely to happen. So on the right-hand side with propagating, we see what normally happens. Sorry, that box was cut off a bit there. We see what normally happens in these markets in terms of how many candles it would normally go in an upwards or downwards direction. And on the left-hand side, we see where we are relative to that. So we can see where we are relative to the probabilities. We also want to look at nearest UFOs. UFO stands for unfilled orders. What unfilled orders means is where we expect there to be big stacks of buy orders that could push price upwards, or big stacks of sell orders that could push price downwards. And we are looking for those on a chart to tell us where those buy and sell orders could be. We use our Auto UFO app to let us know where those could be on a chart. It highlights them for us automatically and shows us where those stacks of orders are likely to be. And we use our Auto Climate app to give us an idea of the direction and the environment that we're in, as well as propagating as well. So we're using technology to look through the statistics for us and give us that information. So we also look at volatility. Volatility means how fast we expect markets to move or how far we expect them to move within given periods of time. Now, we get that expectation from something called current implied volatility. Now, what that reflects is the options values, the options prices of these markets. So especially for these major markets, you know, the S&P, oil, gold, the euro, it is professional traders mainly that are trading those options of those markets. Now, in options, there is going to be a risk involved depending on how fast these markets move. So more or less a risk depending on the movement that we have in those markets. So for professional options traders, when they're buying and selling the options and therefore setting the price of the option, in that is how fast they think these markets are going to move. Because how fast they think it's going to move will dictate what they're willing to risk and what they're buying and selling it for. So the current implied volatility being based on the price of the options and the price of the options reflecting the movement that we think is going to happen in the markets or that professional traders think is going to happen in the markets. Effectively, what we see here is a consensus based on professional traders as to how far they think markets will move. So in effect, if you didn't understand any of that, it's just to say that these numbers are a professional opinion on volatility. So we can get an idea of how far we expect them to move based on professional opinions. Now, everything in implied volatility is a percentage and it's done annualized. So it's done in a year. So what this means is that we would expect a movement up or down in 1 year as a percentage of its current value. I'll come back to this a bit later. We'll go through it market by market. We'll then come through and look at news, high impact news that could affect us, and then we'll finish off for the day. So a lot to do. So we're going to start with the S&P. We are using SPX.X. That's the symbol on the on TradeStation in order to see this index. So we see at the bottom here, this is our Auto Climate app. So the Auto Climate app is analyzing the trend and direction for us and giving us probabilities and statistics around it. So it will show us these probabilities in one of three things. So we either have a thick blue dot, which tells us we're in a confirmed upwards climate, meaning we're in an uptrend, an upwards environment, and we have probabilities to the upside. It could show us a thick red dot. That tells us we're in a confirmed downwards trend. Confirmed downwards market, probabilities to the downside. Or it could show us a thin dot of either color. The color still tells us the direction, but the fact that it's thin tells us that we have low probabilities or less probabilities, and therefore most of the time as traders we would choose not to do anything on those days. So here we have a thick blue dot, so that's telling us we have confirmed probabilities to the upside. Now, in terms of orders that could move price, our closest stack of buy orders is here. That's shown to us by our green UFO. The numbers for that are 3294.61 to 3284.53. Closest stack of sell orders just here, as shown to us by our red UFO, at 3373.23 to 3393.52. That's where we expect there to be orders that could push price downwards. The green UFOs, the buy UFOs, are where we expect price to be pushed upwards if price does hit it. Okay, so that's what we've got here. And as we've seen, we're just inside this red UFO at the moment. So in terms of propagating, we saw we had We saw we had a confirmed upwards climate. We show that here on the newsletter by just showing you a arrow pointing upwards. If it's an unconfirmed climate, it will have a little cross next to it, like we have on this one below. As it's no cross, it tells you it's confirmed, so the probability is there. Now, normally the S&P would go up for 11 candles on a daily chart. By the way, whatever that number is on the right-hand side, I'm just going to round it up. So whatever it is, whatever the decimal place is, I'm going to round it to the next number. So it normally goes up 11 candles, and we're on candle number 7. So we have a confirmed upwards climate, probabilities to the upside, and we have probabilities that it's likely to continue for another few days. That's not to say it always will. Of course, sometimes things fall short of probabilities or surpass probabilities. We'll see that a bit later when we come back to the euro. So it's not to say it definitely will hit 11 and then change. It's just based on what is statistically likely and probable to happen. Now, bear in mind, yes, we have a confirmed upwards climate. We have probability of it continuing, but we've just hit a big stack of sell orders. We expect sell orders to push price down. So we've got these two forces now working against each other. So just bear that in mind when it comes to trading. Now, in terms of volatility in the S&P, how much movement could we expect in 1 year and then in subsequent time periods? So we use VIX.X, that's the chart symbol that we use to get the current implied volatility numbers. And we see from that we would expect a movement up or down in 1 year on the S&P of 22.84%. And again, that's based on professional options traders' opinions, which means in 1 day, we would expect a movement up or down of 48.22 points. In a week, up or down of 106.15 points. And in a month, up or down of 220.96 points. Okay, so next market, we're going to look at oil. We're looking at CL. That's the continuous futures contract for oil. So let's take a look at that, CL. Okay, so I'm just going to move this down a little bit here. Going to need to squidge it a bit so we can see what we need to see. There we go. We can still see it. Lovely. So on the bottom here, we have our auto climate. Okay, so that's actually showing us a thick blue dot. I would imagine maybe a little while ago it was a different color. So I'll talk about the differences there. So thick blue dot would tell us we're in a confirmed upwards climate. However, I think at the start of the day, that dot was probably showing us a red dot that was unconfirmed. So it might be different on the newsletter there. Now, in terms of buy UFOs, closest stack of buy orders down here, 26.03 to 25.52. That's our closest stack of buy orders. We can see here we have two UFOs just on top of each other, so just nestled together there. Closest stack of sell orders is up here, 53.55 to 55.43. Again, that's where we have our sell orders shown to us by our red UFO that we would expect to push price down. At the moment, we're sort of in the middle of nowhere. So if we did have an unconfirmed climate, that kind of makes sense. We're not really close to one force or another pushing price either way. So yeah, okay. So I did see there on the newsletter, we're showing that an unconfirmed downwards climate. Again, that probably changed from when we did it this morning. At the moment, we're seeing a confirmed upwards climate, but if it's changed already, I would say there's probably less confirmation, less probability there. Now, normally we would expect oil to go down in this case for 7 candles, and we're on candle number 1. So probabilities that it continues to the downside, but like we said, it looks like that climate has just recently changed. So maybe keep an eye out with oil, see how that goes. Bear in mind that we are in the middle of nowhere when it comes to UFOs. Of course, we could have new orders that come into the markets that move things up or down, but for now we're in the middle of nowhere. No force pushing us either way. Okay, so in terms of volatility on oil, we look at OVX.X. That's the symbol that we use. And from that, we see that we would expect a movement up or down in 1 year of 37.43%, which means in a day, a movement up or down of 0.98 points. In a week, a movement up or down of 2.17 points. And in a month, a movement up or down of 4.51 points. Okay, next market, we're looking at GC. That's the continuous futures contract again for gold. So at GC. Okay, so gold is a funny one. It's quite an interesting market at the moment. So we have a confirmed upwards climate again. No surprise there. We can see price just move up and up and up there. Closest stack of buy orders we have here. That's 1836.7 to 1825.9. Now, what we don't have on this chart are sell UFOs. We normally would have buy UFO and sell UFOs, we see both. At the moment, we're effectively hitting all-time highs here on gold. Now, we do have sell UFOs from decades ago, but they are very likely cancelled. And so we're not showing them here on this chart nor on the newsletter. So a lot of push to the upside. Closest buy UFO, little way away now, but confirmed upwards climate. Now, remember we said before, sometimes things go outside of probabilities. We see that here with gold, because normally gold would go up for 6 candles in a row. And we are on candle number 16. So 2 and a bit times more what is average in this market, what is normal, what is statistically likely to happen, what has probabilities with it. Now, that's not to say we're not going to keep going. Of course, we've pushed that probability, that statistic, quite a few times already. But just bear in mind, the more we go past what is statistically likely to happen, the less likely it is to happen. You pull an elastic band and keep pulling, it is much more likely to contract in on itself and much less likely to allow you to keep pulling it. Same concept here. So of course we may continue to the upside, but we just lose probabilities every time we go past it. We lose more and more probabilities. So again, bear that in mind. So coming down to volatility on gold, we look at GVZ.X, GVZ.X, and we expect a movement up or down in 1 year of 26.22%, which means a movement up or down in 1 day of 33.7 points, in 1 week, 74.1 points up or down, and in 1 month, a movement up or down of 154.3 points. Okay, last market, we're going to look at the euro US dollar. That is the spot forex currency pair, euro versus the US dollar. Okay, so I'm just going to show you, I'm going to scrunch this a little bit here, show you what we mean with these UFOs. So confirmed upwards climate, thick blue dot telling us we have probabilities to the upside. Not surprising again, we've just seen price keep pushing up and up and up. Now, we've had multiple UFOs. We've obviously got, I think that's 9 or 10, 5, 7, okay, 8. Yeah, 8 UFOs, one after the other, after the other, after the other. Just buy UFOs, buy UFOs, buy UFOs. Now, with that, we expect buy UFOs to push price up, and that's exactly what we've seen here. So in this one, this band that we have here, that was a UFO. Price came into it and it went up. Came into it again and it went up. Created a new UFO, went up, came back, hit it, went up. Came back, hit the next one, went up. So that's what we expect buy UFOs to do, is push price to the upside, and that's exactly what we see happen here. Now, what's interesting is we have literally just created a sell UFO. So sell orders pushing and price back down again. We have that at 1.1862 to 1.1917. That's the closest stack of sell orders. Closest stack of buy orders is the top one there, 1.1597 to 1.1507. I've just rounded that where it needs to be there. So we have confirmed upwards climate, pushing price to the upside, multiple buy UFOs beneath us, and we've just started to see price potentially turn there with new sell UFOs. Now, in terms of propagating, normally the euro US dollar would go up for 4 candles on a daily chart, and we're on candle number 26. So quite a bit overextended, over 6 times overextended than what is normal, what is average, what is expected on these markets. So again, bear in mind, the further we go past what's normal, the less likely it is to happen. Plus we've got these sell UFOs. So we have a confirmed upwards climate, multiple buy UFOs. We have overextension and a sell UFO. So again, 2 sort of equal and opposite forces there fighting against each other. So it'd be interesting to see there what happens, which force wins, if we keep pushing to the upside and break through that sell UFO, or if this is the start of a downturn and then come back and change the climate. So in terms of volatility, we look at EVZ.X or EVZ.X, and we expect a movement up or down in 1 year of 8.01%. Meaning in 1 day, a movement up or down of 59 pips. In a week, a movement up or down of 131 pips. And in a month, a movement up or down of 272 pips. Okay, so volatility gives us an idea of how far we expect these markets to move, or how fast we expect them to move. The climate and the propagating give us an idea of in which direction and for how long. And the nearest UFOs give us an idea of where price is likely to turn. Okay. So just coming down here to look at an indirect force in the markets, Reason I say that is because the most direct force that can make price go up or down are buy orders and sell orders. That's it. Buying and selling. That's what makes price move. Of course, there can be many reasons for why there are buy and sell orders, and news is obviously one of them. So it's an indirect force, and of course it does have an impact on the market. So we need to be aware of it. But again, just bear in mind, it is of less significance than the buy and sell orders themselves. Now, in terms of news this week, we have nothing today or tomorrow. It looks like a pretty low week when it comes to high impact news. What we do is we go to fxstreet.com/economic-calendar. We filter by high impact news and we filter by US markets. So if you trade outside of that, maybe you trade markets in different parts of the world, or you want to look at news that has lower impact, you're welcome to go to that website and play about with the parameters there and change it. So in terms of high impact news on US markets, nothing today, nothing tomorrow, not coming up till Wednesday. Okay, so a couple of reminders before we finish today. If you want to join the fun and be with us in our future sessions, option sessions, investing, the psychology sharpening, stocks, the sharpening sessions where we go over methodology plus support as well, you can join the fun at www.tradictive.com/youcantrade. It is a free 14-day access. So you can try us out for a couple of weeks first, see if it makes sense, and then go from there. In terms of the next upcoming course, the next one we have here is the psychology course. So you can go to tradictive.com/psychology live. Now, we say this a lot on the channel. Psychology is so often overlooked, and it's probably the main reason why most traders struggle. Unless we sort out what's going on between our ears and apply ourselves in the right way to whatever methodology we use, it's unlikely to work for us consistently. Psychology has a huge impact on our trade. So if you haven't already looked into trading psychology, I would highly recommend it. And if you want to do it with us, then if you go to that link, tradictive.com/psychology live, learn more about what we cover, what we do in that class, the instructor and things like that, and go from there. Now, you can register for any course and get an additional course for free. So it's like a buy one, get one free situation. So you can go to the website, have a look at what we have a look at what you want to do, and put that together in such a way where you make the most of that deal, because the second one that you pick has to be of equal or lesser value than the first one that you pick. So you can obviously put it together in such a way where you can be clever and get the best out of that deal. If you have questions on anything I've gone through today, on courses, on the technology that we use, if it didn't make any sense, just email us, support@tradictive.com. We're always happy to help. Otherwise, today being Monday, within Tradictive, for those of you that are joining us from within the channel, we will see you in the future sessions at 9 a.m. and the option session at 1 p.m. And at 4:15 p.m. Eastern, my colleague Boyan will be looking at what did happen in the markets, which of these forces won, why we think that happened, what can we learn, what can we reflect on in order to improve our trade plan the next time. So make sure to join us on those. Otherwise, I'll be back in the morning. So I'll see you again tomorrow morning, guys. Have a good one. Have a good day.